let's get to our vibe checks because we got to dig deep a little bit here, trying to figure out our big overall takeaway. And we redid this, I believe, this is the time that we're debuting the vibe checks like this. So now it's on a numerical scale of 0 to 5. I'm going to go right in the middle with a 3 because I thought it was a fair call. I thought it was okay. Nothing on this really stuck out to me. Nothing made me think of Netflix any different than I did going into this. They didn't give many details like we have been saying, but they were very upbeat just on what they have seen so far in terms of the crackdown on password sharing. They said that they were, quote, pleased with the per member ad plan economics that they have seen so far when they were asked just about the average revenue per user from that plan. Again, light on the details, and I think it's something that the street wanted to hear and was hoping to hear a little bit more about. What did you think?
No, I think that's spot on. I am going to also, for my vibe check, give this a 3 out of 5. I'm right in line with you here, and I'll even add, I don't know if they can put my camera back on for this particular part of the vibe check, because illustration to bring back into the chat to go along with my vibe check. And here's why. Where was the talk about the free cash flow? That was perhaps one of the better elements of this report, a huge surprise to the upside. It actually beat on even the high level of the consensus expectations for free cash flow for the quarter, came in at $2.1 billion, just above that. It was expected to come in at just about $900 million. And so ultimately, I think there wasn't enough focus on what that free cash flow could do in terms of some of the dry powder that gives them and really driving back towards their goals of content production in order to get into certain regions and have favorability. They're looking at this $17 billion spent on average between fiscal year 22 and into 24. And that's on average. So they're really going to be looking to ramp it up to get back $17 billion by fiscal 24. And so the free cash flow that they're going to be able to generate, I think that's something that they could have leaned into more as that being the next wave or the driver of the next wave, or one of the catalysts of this next wave of the leg of growth for Netflix here. So I don't know. I think that just could have been leaned into a little bit more.